An investor, entrepreneur, author of 18 books translated into 8 languages.
Childhood was watching entrepreneurs around me build companies, and in the case of my father, list a company.
Alpesh Patel has spent decades bridging the city of London and the markets of Mumbai.
And then the British government said, would you advise the Prime Minister on something called the UK-India Roundtable? So for 5 years, I was advising I think there were about 10 of us on the UK-India Roundtable. And we advised the Prime Ministers of both countries, UK and India.
He's been a familiar face on Bloomberg and BBC World, reaching audiences of hundreds of millions.
So you have the ability to create, in one country, a global company with all the skills and traits you'd want from different states all pulled in. And that's been the improbable unifying factor of India, because if you think about it, you cross the border and you're talking a different language, you're eating different food. India is like Europe, but 4 times the size, and yet more unified than Europe is.
Beyond the headline, Alpesh sees patterns of other misses, blending data, instinct, and experience to make finance more accessible and more human.
What impresses me is that they're getting to those levels of structure, best practice, and you need that, because if business isn't easy. You've got competition in India. You've got hyper competition.
Sure.
They've got a lot of people who've got that hunger, the hunger that this little boy from Leeds had. Well, multiply that by 100 and you've got that size population. Everybody wants a piece of the pie. That creates elite companies, because the ones to survive didn't survive in a little incubation laboratory in a greenhouse. They survived in a storm.
Strategic, outspoken, always ahead of the curve, Alpesh is helping write the next chapter in investing in India. So, Alpesh, so glad to have you with me today, all the way from London.
Yes.
Maybe I'll just start with a short introduction on yourself. So you are a managing partner here at RootBridge. You're an Oxford Fellow, best-selling author, TV broadcaster, and you have been described as one of UK's most known investors. You have advised the Prime Minister on UK-India relations, helped bring over $1 billion of tech investment into the UK, hosted 300 shows on Bloomberg, written 200 columns in the Financial Times, written 18 books on investing, which was translated into 5.
Can I just say, I wrote them all myself. I'm sometimes asked, did you have a ghostwriter? I said, no. Why would I want a ghostwriter when I enjoy writing? I did have a co-author who's on some of the books. I think there were about 5 of them I had co-authors. So we shared the workload 50-50. But yeah, I love writing.
And now at RootBridge, you're leading our large cap strategy and translating your experience into our focused investment lens on India's next decade of growth. Alpesh, welcome.
Thank you.
Let's start then from the very beginning. Where did you grow up and what kind of childhood did you have?
I grew up in Leeds, which you know about Leeds. It's 200 miles north of London. It is the second largest financial centre in the United Kingdom after London.
I did not know that.
Yeah, well, most people don't. And it's a fantastic hub. First of all, to grow up, because there's a strong sense of community. There's entrepreneurial nature there. A lot of Indians migrated there. So I was born in Leeds. My parents migrated there. My grandfather was in the British Army, so there's always a British connection.
Interesting.
And then moved there in 1968. It's quite an industrial place, or it used to be. Now it's more service industry, like much of Britain. And that gave a really good springboard, because my family then went into business. They went into, would you believe, nightclubs. Pubs, hotels, a nursing home. And my father went from Leeds back to India in 1979 and set up a dye manufacturing company in India. And I went back with him and my mum. And that company's listed on the Mumbai Stock Exchange. I'm probably jumping too far ahead, but childhood was watching entrepreneurs around me build companies, and in the case of my father, list a company, which is there to this day and rather profitable. I'm proud of. My dad is my hero, because he came to Britain with no qualifications, and thanks to both Britain and India, made a success of. And I got to see firsthand how this man did it, and I'm not even 1% of the man he is. But what a privilege to be able to see that. And with the support of my mum, I mean, they're Romeo and Juliet. I mean,
so you've seen companies being built in India, in the UK, but I also know that you're a proud son of an NHS nurse, right?
Yes, well, my mum was a nurse in the National Health Service. So I come from very humble beginnings. You know, Leeds, Armley, where I grew up, where I went to school, where I was born. It's not the wealthy part of Leeds, though I love it. It's beautiful. It's lovely, the loveliest people you'll meet. But that developed a hunger for investing because for me, to have social mobility meant, well, I want to have the best people in the world managing my money.
Sure.
And the best people in the world were some of the best companies in the most growing areas. So that's what in the 1980s when privatization happened in the UK. And this is still me in childhood in Leeds because I came back from India when I was about 10 or 11. The privatization meant I saw firsthand that if you invested in private companies then going public, so you went from private to public, you earned money because people were working hard for you. And it gave that element of social mobility, growth, and that was imbibed in me from a young age. Now, my family doesn't have that investment background. They have the entrepreneurial background.
Sure.
But because they had the entrepreneurial background, I was able to expand into the investing one. It meant, I guess, as a family, we were diversified in terms of investments, in terms of knowledge, in terms of know-how.
But investment was not there straight away, right? You studied philosophy, politics, and economy?
I mean, I started investing when I was still at school because of privatization was when I was still at school and still childhood. And then I went to university. Would you believe I have degrees? I should say, when people read out my bio, I look at it and I think to myself, A, I'm incredibly lucky, and B, somebody's going to listen to this and just hate me and think, God, I've made up my mind. I don't like that guy. He must have had it easy in his life. No, I've been very fortunate. I've been very, very lucky. And what you don't read in a bio is the 99 failures. You read my one set of successes.
Sure.
You haven't seen the 99. My LinkedIn bio of failures would break the internet, as with anybody else's. And that's what people forget. And luck is such, right place, right time. And they've been, awful moments as well. I mean, like anybody, we could all be billionaires. Why? Well, those things didn't work out. That didn't work out. That didn't work out. So, so there's all of that. But So yes, I have a degree in law and also a separate degree in philosophy, politics, and economics. That fed into the investing thesis because it gave me a better global view. So I was never fazed when I look at a company's set of accounts, balance sheet, cash flow, P&L, or when I'm talking to CEOs and they're talking about geopolitics, international relations, any of those things, because actually not only did I have the degrees and that gave me the confidence. So I never felt an imposter in those areas. It gave me the confidence to understand what they were talking about and take that further. But also then I was fortunate enough to lecture as a visiting fellow at Oxford University on these areas.
Sure.
And that also gives you a degree of not just knowledge, but it meant that you looked at your good fortune and you said, right, how do we now do this for others? I did it for myself. How do we do this for others? And you can sort of see where I'm coming from in joining up some of the dots of my career and my life.
But then what made you pivot? So because you started your career as a barrister before moving into finance, media, and policy. What is the sort of connecting thread across all those chapters?
In 1987, I had to decide whether to go into finance, and we had nobody in the family who was in finance.
Okay.
And I love finance, but I knew nothing about it. And it was 1987, the stock market crash. You'd be a fool to say, yeah, I think I'll go into finance. So I went into law because from a young age, my uncle would watch Ron Paul of the Bailey, and then in the mid-80s, LA Law, and it was like, you should be a lawyer. And I thought, I like that. I get to dress up in a gown. I get to wear a wig. My dad's lost his hair. I better have a profession where I can wear a wig. And there aren't many where you can wear a wig. Not respectable ones. So law was the one. And once I started practicing, so I initially started in the area, so when you do your training, is the first time you get practical exposure to it, was in the field of pensions law, trusts, commercial law, company law. And that, again, gave me a degree of confidence in all the areas that I deal with. When I work with companies and I see contracts, they don't faze me at all, because obviously that's the area I'm used to, and I came from a business family as well. So I was doing that, and then I thought, I'm not enjoying this. I actually want to be the investor. I want to be the person who's
on the other
investing
side.
the money. Exactly, not just the advisor. And then I started investing on my own account, and then eventually set up the company in 2005, and then met Ajay and Nayan, and we formed a team which is now, we've been going for 20 years, probably longer. Yeah, something like 20 years now.
It's incredible.
And when you gel, because 20 years, I mean, that's longer than most marriages. So that's how it transpired. Before that, there was a lot of politics going on, and I was fortunate Steve Jobs says, join the dots in your life, because that gives you some kind of compound interest in terms of your leverage, your ability, your strength. So the dots we joined were that I was working in the US Congress for a while when I was at university.
Yeah.
The legal background, the qualifications, the training other people in terms of finance, behavioral finance, and then the Financial Times found me and said, will you write for us? Bloomberg Television said, would you do shows for us on investing?
Incredible.
And all of those dots you can then join, because you build an incredible network. And then the British government said, would you advise the Prime Minister on something called the UK-India Roundtable? So for 5 years, I was advising actually I think there were about 10 of us on the UK-India Roundtable. And we advised the Prime Ministers of both countries, UK and India, on closer relations.
So not on one side?
Not just the one side.
That's interesting.
Both Prime Ministers.
Okay.
And there was a delegation from the India side, about 5-6 people, and from the UK side, 5 or 6 people. I was the youngest by far on the UK-India Roundtable. To give you an idea, some of the people on there, Uday Kotak of Kotak Mahindra, who now is a billionaire and has Kotak Bank, of course. So I was very fortunate, again, to have been asked by the government to do that. And some of that came about because of the visibility in the media. I mean, when I won competitions in the Financial Times to forecast the markets, and then Channel 4 picked up on that, and they ran a show called Show Me the Money, and I won the competition on that, and they said the best known trader in the UK. That all came about from the visibility, and I thought, well, if I've got visibility, then surely raising a fund is the next step to go.
Sure.
And so it was incremental, slow but incremental.
And that's the way.
Yeah,
okay.
and then in a way that the rest is history.
Amazing. But then I want to still stay in sort of those early years. If you had one life lesson from your early years that you still carry into markets today, what would it be?
Don't worry. Don't worry so much.
Okay.
But that's personal to me.
Yep.
The thing, if I gave you a goose that lays the golden egg, so let's say I could create for you a great portfolio, okay? I guarantee you in 12 months, you would still mess it up. And you'd say to me, what? How? You just give me the goose that lays the golden egg. In 12 months, I'll call you up and I'll say, what have you done with the goose? And you'll say, I killed it and ate it. And I say, why? And you'll say, well, I got bored. The eggs didn't come frequently enough. Or I panicked. It delivered 2 or 3 eggs and I thought, surely there's going to be no more. It's going to explode. So I just killed it and I ate the goose. That's what kills making money for most people. And the genius of Warren Buffett, when he says my hold period is forever, is what he's implicitly saying. And we know that's not the truth because we know he changes his portfolio. What he's implicitly saying is I will not panic and I will not get bored. Sadly, what people don't realize is it's not about the stock pick alone. That's the first step. That's 1/3 of it. The 2/3 of it is us making sure the client doesn't panic or get bored because they worry. They worry more than we do because we've seen the data, so we know not to worry. We've seen the history, so we know not to worry. And we know we've got good quality companies. We built, if you think of the old children's tale of the pig, the 3 little pigs and the wolf, we didn't build our house on straw. We built it with bricks. So when the storms come, which we can't control when they're going to come, and we know from world politics, nobody can control what's going to happen and when it's going to happen, and it's unforeseeable. The best we can do is make sure the house is built of bricks and show the client it is built of bricks because of this. These are undervalued growth companies. So the lesson is not just not to worry, because then that's just an aphorism. It is to say, well, why am I not worried?
Yeah, sure. Having the back.
And I would say that for me personally has been the most important lesson in life, but it'd be different for different people. But yeah, that's critical to success.
But it tells you a lot about, I think, about your way, the way how you think, which is very key for us, and also in understanding a little bit more about your train of thoughts. I just want to jump very quickly on the sort of policy side of things of when you've advised the UK Prime Minister. I know you said you worked at the US Congress.
Yeah.
And worked obviously in the UK government for over 20 years.
And I still do.
Oh, you still do? Okay.
I still have my role in the UK.
What did those experiences really teach you about how global capital and policy really interact? So
with the Prime Minister, it was Tony Blair. I was appointed by his office in, I think it was 1999 or 2000 for 5 years. It was a 5-year term. And then from 2005 to now and ongoing, I'm one of the UK government's deal makers. There's about 10 of us. So these are people in business whose job it is to bring high growth, scale up technology companies at the cutting edge. So in AI, for instance, from various geographies to get them to set up their headquarters in the UK. The geography I cover is India. So for the last 20 years and sometimes 8 trips a year, I've been using that expertise and experience to bring them, sometimes with prime ministerial delegations. There's a lovely picture of me with Gordon Brown. I hosted an event, Theresa May first, and then I was on stage to host a tech event. So I've been out with quite a few of the UK prime ministers on this. So I've been lucky. The issue then becomes, well, what use is that in terms of the investing? I think it gives you perspective and insights. It's not that it gives you what people think. It's not that it gives you some kind of inside information. What it does is it gives you that breadth of perspective that when you've made your investments or what you're doing, you, again, have a degree of confidence in the decisions you've made because you can see deeper and you can see further. And you've got a better sense of what's going on. I'll give you a classic example. 2 weeks ago, I was invited by Goldman Sachs, head of India, who's an old friend of mine, Sanjoy Chatterjee, to their Asian Leaders event in London. And I walked in. Sanjoy gave me the biggest bear hug. And I get Goldman Sachs' research, obviously, and keeps an eye on things. I get JP Morgan Private Bank's research and keeps an eye on things. And I just thought, what a wonderful man. But isn't that fortunate for me to have friendships that long that in the middle of a whole crowded room, he would give me a bear hug, and bless him for it. And then the CEO, the co-CEO of Goldman Sachs International walked up to me, and I've not met Kunal before, and he walked up to me, and he said, "You're Alpesh." I said, "How do you know?" And he said, "I saw your LinkedIn posts." He goes, "One of them went viral about me, and my team in the CEO's office said to me in the marketing department, said, 'Look, have you seen this?'" It's the accidental networks. Now, does that mean I'm going to be a better investor in India? No. What it means is if you multiply that over 25 years and 100-fold, it's the data and information you're getting. I'll give you a really good example of this. The cash return on capital invested is a metric which we use. We got that from Goldman Sachs Wealth Management. How? Well, because Jim O'Neill, when he was chairman, invited me to a lunch when we set up the company originally about 20-odd years ago. And at that lunch, they brought their quantum division research team in, and they showed us this presentation about how cash return on capital invested companies in the top quartile generate an average annual return of 30% per annum. Not every year, not every company in the basket. So we knew we wanted to look at that formula. I didn't invent that. But had I not got those networks and those connections, I would never have worked that piece of information out, because it's not actually an academic journal. I mean, well, it is, but it's not presented as well as Goldman Sachs presented. So taking from all of these best sources, now I've never had the luck to meet Nobel Prize winners, so I've only had to rely on their academic papers, but we do particularly rely on the work of Richard Thaler, Daniel Kahneman, Eugene Fama. And when I was lecturing at Oxford, I was quoting their work, and in my Financial Times columns, guess what happens? Each one of them, independently of each other, went on to win the Nobel Prize in Economics. So I got very lucky that the people I decided to follow and emulate their research and use their research for investing happened to be the best in the world. Now, that's good fortune. I mean, I don't have a particular skill of picking future Nobel Prize winners. Donald Trump does. I don't. So what happened is there was an element of luck, but it was because you were surrounded. Well, you were at Oxford University, so what were you going to read? You're going to read the leading economic papers. Yeah. You know, you get invited by Goldman Sachs, and you're going to look at their research, and you find, my God, this is gold. This is what they're using for their richest clients. You know, got 50 million. I'm sure they'll do the same for those clients. But I thought, well, why can't we use this? And we could. So it was that mosaic of information and being able to use that, which I felt was critical to success. And it has been. Especially when you consider, grew up in Armley. Let's not forget, that is not as if daddy was chairman of,
sure. No, you build that
Rothschilds.
yourself.
So you had to do this. You had to
It's very impressive.
You had to get this. And my story is the same as probably thousands of people who realized they had to get all of these connections in order to you could say better yourself or social mobility, call it what you will, but we all want to do better each year than we did the year before. And that social capital is critical.
Then talking about social capital, you've obviously seen entrepreneurs from, India, the UK, I assume parts of China, the Middle East, quite close up. How do their ambitions and their risk appetite differ across cultures?
Yeah. So for the UK government, my patch was India initially, and then India and China, and then Southeast Asia, and then expanded to Middle East because I was bringing in the deals and the scale-ups and the companies. And over time, so with India, it was 8 trips a year, meeting entrepreneurs throughout, working with the British High Commission, finding the most talented companies and individuals and getting them to set up their headquarters in the United Kingdom and then helping them expand. And I'll give you an example. One of those companies, a cybersecurity company called Athenium Technologies, was on the delegation with Prime Minister Keir Starmer to India just now. So that's my job, to find the talent. Now, if you think about it, I'm finding that talent for the 5th largest economy in the world, a $4 trillion economy, the UK government, UK PLC. In a way, that's what you're doing in a private equity firm. You're actually finding the best talent. My wife was talking, I think it was yesterday morning, to Sequoia, the best of the best out of Silicon Valley. And they explained to her, we're looking for talented founders. That's our job. All we're looking for is talent. It's the individual. Now, what's the difference between them? Or
anything that differs in India is the question.
I think what the biggest change I've seen with India is it's gone beyond looking within its own borders. Of course, the easiest game is to sell to the Indian market. It is a $4 trillion, slightly more, $5 trillion economy. It's the 4th largest in the world. And selling domestically, great. You'll do incredibly well. Now they've got global ambitions because they've seen it. Who's the head of Microsoft? Who's the head of Alphabet? They see these leaders. Who was the chairwoman of Pepsi? Who's the head of Adobe, IBM, Chanel? They see all of this and they say, wait a minute, we want global ambitions. We don't just want to be known in India. We want to go global. That's been a critical change with Indian companies, which makes investing in India even more, the risk reward even more lucrative, because you've got the reward, of course, from a growing economy growing at 8% and yet bigger than the UK. The UK might eke out growth of maybe 1% to 2% in a good year. This is 8% and it's a bigger economy. So it's unusual for an economy of that size to have such high growth rates.
Sure.
So if you've got that and then the resilience of the numbers that you've got, so you can find talent. It's hard to find talent if you've only got 10 people to pick from. If you've got a billion, then you can sift through a lot of CVs and you're more likely to find gold. And that's the danger that the Middle East has. It just doesn't have the numbers. Now, it's attracting talent in. They've got ambition. You just haven't got the numbers. Sadly, you have not got the number of people. They will do well. And the vision, for instance, that His Excellency the Sheikh has had for Dubai is world class. I mean, he is of the caliber of the founder of Singapore. These are politicians. You look at them and you think, rarely in history have there been people who have been that good for their nation. And it is rare. I mean, we look at Western democracies and we think, okay. I mean, I'm talking to you after President Sarkozy's just been imprisoned. So I hope the best for the Middle East, but they don't have the numbers. They will make up for it because they're very good. They're clever. They can attract capital, and they can, and it's not either or. And Indian companies are very good at setting up bases there, taking in capital and growing. And this is the great thing about the Indian story. China remains somewhat insular, but it's not just that it is insular. The West has had problems in their relationships with China. So China is going to have obstacles in its way, both from when I sit across the table and we're listening to Chinese entrepreneurs, they're always incredibly welcoming to us. Okay, whether it's in Beijing or Shanghai, I go. But it'll be in Mandarin. Language will be a problem. They've got a huge economy. You could argue they don't need the rest of the world. Fine. But they are going to, obviously, as we've seen already, look at TikTok. They're going to find it more difficult to penetrate those global markets. Okay, you look at the volatility of Alibaba and the stock price of how much it's fallen, and now it's starting to rise, but it's incredibly volatile. So the story hasn't been simple and a one-way bet. So for us, certainly for the UK government, as you will know, the focus is very much more India than it is China. I mean, for both political and economic reasons. And that's no
historical
secret.
as well.
Historical, and it is no secret. And the same for the EU. The focus is India. It is not China. And politics does get in the way of economics. If we could all be friends, then that'd be fine. But you only need to see that with India, you're dealing with an ally, regardless of what people say about Russia and oil. It's actually friends with every single country in the Middle East. Now, you name me another country. I don't know, maybe the Swiss are, because they're renowned for being friends with everybody. But India is the only country which is friends with every single country in the Middle East. It recognized the state of Palestine, I think, in the 1960s. And yet, it is on incredibly good terms with Israel and Benjamin Netanyahu. They have state visits to Iran and to Afghanistan, which you could say is outside the Middle East. But it's friends with every single country in the Middle East. And that makes for a greater degree of stability and inward investment into the country and growth, because the country needs capital.
You're touching on a very interesting topic here, which I was going to bring up. Trade tensions, obviously. The word of the moment is very much those tariffs, protectionism, which are completely back in the current headlines. How do you see India positioning itself with this sort of reshuffling of global trade dynamics? And do you see the US-India tariffs conversation as a headwind or catalyst for local resilience?
Short-term headwind, long-term catalyst. I'll tell you why. There's a great phrase Warren Buffett often talks about. He says you ignore the shrill headlines of the journalists because journalism has become increasingly, through the focus of social media, rage bait. Emotion. If you can evoke emotion, you get hits on your page. If you get hits on your page, that journalist survives. And I'm telling you, as somebody who used to write for the Financial Times, it was never overtly said like that, but it was once pointed out to me that on my page, my column was one quarter and the next 3 quarters of the page were adverts. And they said, yours is the most expensive real estate in the Financial Times at the weekend because you're talking about online trading and the brokers spend the most money to get the eyeballs. They know where you are. The eyeballs of the rich clients are going to be, and they're going to open accounts and the broker's willing to pay for it. Now that's taken online. As a journalist, I'm thinking, right, what are my numbers? Have I got how many eyeballs, how many likes? And therefore I've got to escalate and get everybody worked up into a fervor. The reality is, and my uncle visited my home recently, and he looked at a book that the Indian Foreign Secretary had signed, the Indian Foreign Secretary's book, and he'd autographed it for me, and because I met him, and my uncle said, "Wow." Now, if you know the Indian Foreign Secretary, you know there is a calm man who has perspective, because it's an ancient civilization, just like the Chinese. They have calm and perspective. They're not easily panicked. And they've seen empires come and go. They've seen kings and queens come and go. So in the short term, the tariffs and hardships come and go. I've seen my father build a company in Gujarat which had, do you think tariffs are bad? You should see the regulation India had in the 80s. I mean, you could barely start a business. These tariffs that Donald Trump thinks he's putting something difficult on India, those people were built by walking through walls. The license Raj, they used to call it. This was a socialist country in the 60s and 70s with everything needing permits in triplicate. And sadly, this is what we used to advise both prime ministers, and the Indian prime minister in particular. Please reduce your tariffs and your protections certainly please do it for your legal services. Surely they can compete. But of course, you're talking to a bunch of lawyers. Lawyers are going to make sure they put things. So India's been, yes, there is something to it that it can compete on the world stage without having such barriers. But that's for its own domestic politics. We're not going to interfere in that. We will, like the Indians do, they work around any licenses. We will work around any tariffs and licenses. Short term, there'll always be new headaches. I mean, it happens in the... We're going to have a budget in Britain. who knows what VAT will go up to? Do you not think businesses are going to say, oh my God, VAT is a tax, it's a tariff? That's going to change. We get changes in our tax rates and tariffs once a year, every year, and businesses have to reaccommodate. But what does that build? It builds stronger, resilient businesses because they realize, hey, I can survive. Just as the EU has learnt after Britain left, hey, actually, we can survive.
We can make that work.
You know? So it's a similar kind of thing. These shocks, economic shocks, in the long term, are beneficial, especially when you look at the growth rate on India. If you look at the tariffs, the impact on the growth rate is estimated at worst to be under 1%. So it's hardly anything. And presidents come and go. And actually, it'll motivate the Indians to reduce their own tariffs, which I think they should do because as a capitalist, guess what? Competition breeds more profits.
Interesting. One last question on this topic before we jump onto more the strategy at RootBridge. If you could whisper one sentence into the ear of a Western policymaker about India, what would it be?
Get closer.
Get closer.
Open your books. Get closer. There's still caution.
Sure.
And they will point to caution because they'll say, well, wait a minute, Indians don't always do our bidding. You know, when we want to go to war, they don't vote with us on the UN Security Council. Yeah, but that's because of history. They're a democracy and a capitalist democracy, a liberal capitalist democracy. You go find me another one in that region of the world. Which of that size, it's going to be pretty difficult. You might find smaller ones. Yeah, Singapore, to some extent, insignificant compared to the size of an India. So they're your friends. What was really heartening to see was the joint naval exercises when the Prime Minister was there in India recently, between the UK and India. Their navies were doing joint exercises of that scale. Their strike forces, which is the first time that the strike carrier groups were working that closely together. And of course, there's a degree of intelligence sharing because they face the common threats. China.
Sure.
So does the EU. It's no secret. And so there's intelligence sharing on that. The reason India has been close to Russia, well, first of all, look at how it got its independence. Mahatma Gandhi, non-violence. So the whole point was not that we're going to pick fights with everybody. It was imbibed in the blood of the country and the nation, non-violent movement. You know, so that's why I think it's good to get close to it.
Interesting. Let's focus on RootBridge a little bit. You lead the large cap strategy at RootBridge. When you look at India's public markets today, what excites you the most and what frustrates you the most?
Frustration will always be things do not move at the speed you want them to. And I'll give you an example of what excites me globally is AI. Now, India in AI is moving really fast. It was actually moving really fast in crypto as well. And that's thanks to the fact that they've got a technophile prime minister. He loves technology and he knows that that can solve a lot of problems. So speed, I'm really pleased with. I wish there were fewer regulations. I wish the ease of doing business was... it's moving in the right direction. The Indians will tell you that. And if I was still advising them, it would be the same thing. They get advice from a million other people, internally and externally, which is reduce some of the regulations, unleash the entrepreneurial spirit, even more so, because I've seen it with my own father, the entrepreneurial spirit of the Indians unleashed. Remember, this was the joint largest economy in the world before the British arrived, alongside China. It is in the blood. Trade is in the blood. And, you know, I'm from a region of India where we're often mocked, Gujarat, as being just so mercantile and trade-based. You know, this is the land of the Ambanis, for instance. And so I think we have more billionaires of Gujarati origin than any other part of India, any single other state of India. So unleashing that entrepreneurial nature. But the fantastic thing about India is, if you look at the Bengalis, intellectual powerhouse, and the Tamils, okay, to generalize, you look at the Maharashtrians, again, entrepreneurial. There are the Marwadis of Rajasthan, similarly so. So you have all the hardworking industrial people of Punjab. So you have the ability to create in one country a global company with all the skills and traits you'd want from different states all pulled in. And that's been the improbable unifying factor of India, because if you think about it, you cross the border and you're talking a different language, you're eating different food. India is like Europe, but what is it, 4 times the size, and yet more unified than Europe is.
That's true. Yeah.
You know, one single solitary government where there's a massive majority for the ruling government, ruling party. Europe is obviously naturally fractured, yet similarly across the border, different languages. India internally never had the wars that Europe had. So that unity of purpose and direction feeds longer term into the growth of the nation, which is great to ride those coattails for our investors.
And that goes alongside with our fund thesis, which is very much about structure, scale and speed.
Yeah.
How do you see that playing out in listed companies?
Oh, the great thing that I love about listed companies is, well, there's 2 phenomenal things which always excited me since I was 12 years old, since I borrowed £100 from my aunt to buy some shares during the privatization era in the UK. Data and liquidity. With listed companies, you've got a ton of data because they're listed, and you've got liquidity. So if I need to exit something for whatever reason, and I'd like to think I don't pick the kind of company where I need to exit quickly, because then surely there was something wrong with the initial thesis and the data anyway, then you click a button and you're out. Fantastic. So that excites me, the ability to have the data on their P&L, their balance sheet, their cash flow, their cash return on capital invested, that Goldman Sachs metric, their Sortino, high average returns, low downside volatility, being able to see that track record under the gaze of a public microscope, being able to see that track record and see, can they rebound quickly in their stock price when there are those inevitable falls that happen in markets, whether those shocks were internal or global, because we're in a linked in economy, whatever the causes were, are they resilient companies? The ability to get that data reduces risk, because obviously without data and information, you're flying blind in an aircraft through clouds.
Sure.
Liquidity gives you a parachute. Okay, so those things, funnily enough, the things that excite me are not the ones that people might think. They might think, it's a narrative. Oh, it's because you've got this story about a growing consumer base and a large middle class and these growth rates and that. Well, of course, but that goes without saying. None of that allows you to do anything unless you can get the data, and you also have, so that's the reward, is the data, and the risk mitigated through the parachute in case you ever need to have the emergency exit, which hopefully you don't. That excites me. Which is perverse, I know. But yeah, it's a bit like somebody saying, what excites you about an Aston Martin? Is it the speed? Is it the leather seats? Is it the smell? And you're going, no, it's just the hum of the engine. It's that.
And when you say organized India, what does that mean at the company level? Is that governance, technology adoption, supply chain efficiency? I
think, you look at Indian School of Business in Hyderabad, one of the world's leading business schools where some of the best people in the world lecture, and the building is directly opposite. I've actually stayed there for events, and the building is opposite Microsoft and all the big companies because they want to recruit from there. What impresses me is that they're getting to those levels of structure, best practice, and you need that, because if you're, business isn't easy. You've got competition in India. You've got hyper competition.
Sure.
They've got a lot of people who've got that hunger, the hunger that this little boy from Leeds had. Well, multiply that by 100 and you've got that size population. Everybody wants a piece of the pie. That creates elite companies, because the ones to survive didn't survive in a small little incubation laboratory in a greenhouse. They survived in a storm. And if they can survive in a storm, then they did it because they had the processes right. They had that organization of capital, the macro level, access to venture capital, access to private equity. They had management structure. They had good governance. They had international best practice that came from the best business schools and the best executives. And some of those executives moved back from America, took what they learnt from over there and brought it. Yeah, and don't get me wrong.
The opposite of the brain drain, right?
Yeah, and also India has taught the world. I mean, it didn't just give the world numbers and zero. It's also sent its best executives from its IITs to around the world. So it's not to say that India's behind. It is to say that it's had that complementarity, that now it's being unleashed as time progresses and people see, well, their company's doing this. We can learn from that. Let's do this. Or even more importantly, hey, he worked at Amazon India. Let's hire him for our company in India, because he's already here in the country and he got trained by Amazon or Alphabet or Infosys or Wipro or Tata, and those things are critical, and that excites me as well, that we're seeing that exponential curve.
But some say India's large caps are fully priced. Are they?
No, it's exactly the same about the US. The general statements, you can never make a general statement about a stock market any more than you can about a people. If I were to say the British are uptight, am I right? To some extent. To some extent, I'm completely wrong. I mean, Boris Johnson as Prime Minister, was he uptight? Anthony Eden? Hell yes. So the same with the stock market. If you want me to find you overpriced companies, I can, but I'm not going to invest in those. The trick is which ones are valued well, or undervalued ideally, but well valued, but have growth which allows for that valuation. So if I give an example of what people might be used to, if I look at the fact that with NVIDIA, you're paying 25 times future expected profits, and you might say, well, that's a bit rich, that's a bit expensive. But then I say to you, yeah, but it's NVIDIA and the growth is expected to be this. Then you might say, okay, I'm willing to take that. Well, the same thing with India. It's exactly the same metrics. They have the same international accounting standards. In fact, most of the American companies probably outsource their accounting to Indian companies anyway. So the point is, when you look at it on those metrics and you say, well, isn't that worth paying 25 times future earnings? Well, let's look at the growth. Let's look at the expected dividend yields. Let's look at the cash return they're getting on capital invested. The Indians, because of their culture and because capital was restrained in the 60s and 70s and 80s, tend to have huge cash returns on capital invested. If you go to an Indian office, one of the things which is startling is you will often see a deity at a computer, because the computer is the gift of work, which is giving the gift of wealth and income and your job. So it is respected, not as a deity, but the deity is there to remind us you are blessed to have work.
Yeah.
Okay? That computer might be 10 years old, probably less so nowadays, because you can't go around throwing money around like we do in the West and saying, oh, well, I hopefully recycle it. Oh, this computer's working a little bit slow. Let me just go and buy another one. No, that's not the Indian way. So they have a huge cash return on capital invested compared to Western companies. That makes them more productive and more efficient as a generalization. And our job is to find the ones which have done that well. And if some of this sounds familiar, it's because Warren Buffett said it, not because we're copying what he said, but it's because he's actually pointed this out with American companies. And we're looking for those kind of small mom and pop shops, that exactly what made his wealth when America was growing post-World War. And he said, well, there's this carpet company, or there's See's Candy. And people said, you're insane. Why the hell would I want that? And he said, well, huge cash return on capital invested. Small company, managed well by people who care and love for it. Well, actually, funnily enough, we're doing the same. We're looking around what he looked around in the Midwest, or in Omaha, or Nebraska, or in Kansas, for goodness sake. Well, we're going to the Kansas and the Nebraska of India and looking for similar kinds of companies at a period in history where India is where America was in the 1950s and 60s.
Can you share a few sectors or examples where you see the most compelling opportunities today?
Well, the obvious ones would be, say, cybersecurity, artificial intelligence, quantum computing, and we're working on this on the UK government side, working in partnerships with India and Indian companies. Now, the thing with quantum is Britain is world class. India is good, but it will do even better in a partnership with British companies in quantum, particularly some of those coming out of Oxford and Cambridge. And some of the delegation to India with the Prime Minister were quantum companies. And if that relationship blossoms, then India will also be a quantum powerhouse, because India has the money, the capital, the people. Okay, Britain has the brains and the R&D. It's not to say India has incredibly clever people, but the R&D that is coming out of some of the leading universities in the United Kingdom in quantum is phenomenal. But then Britain can't capitalize on it very often, which is well known, as well as other economies can. And I think that's an area which is exciting me a lot. But let me not put to one side the consumer businesses, the ones which are just like Warren Buffett See's Candy, the ones which are just growing on being capital efficient and just cash cows, right? They're just boring businesses generating money. And people poo-poo these. They go, no, it'll never happen. Just as they poo-pooed him in the 50s and the 60s and the 70s. What happened? What do I care what the sector is? If it's making money for my clients year after year consistently, then I don't care that it's not NVIDIA. And I'll give you this example. In the last 12 months, at the time of recording, my Goldman Sachs and JP Morgan has gone up more than my NVIDIA. So the point is, it's not going for the sexy, oh, well, this is all shiny. It might be things which are slightly less obvious.
Sure.
Okay? And I gave that as an example because it's less obvious Goldman Sachs, yet well known. Similarly with India, it'll be the less obvious stuff we look for as long as the numbers back us up. Data. We are not going to be speculating on narratives and stories which sound good and press releases. We are data and a very scientific approach. Here's the data, what's the hypothesis, and then what's the outcome?
Interesting. What are you the most proud of how RootBridge is approaching investing differently, both intellectually and culturally?
It would be incredibly inappropriate for me to say what I like about RootBridge's intellectual approach is that it's my intellectual approach. It'd be incredibly arrogant. But actually with investing, you have to be a bit self-assured and assured of what you've done. I mean, you don't have 18 books backing you up only to say, well, I'm not sure that we're doing the right thing. So what I love about it is, it's an advantage of age. You're young. You won't understand what I'm saying. But as you get older, you have the confidence and the experience and the knowledge to know that actually, and to be self-assured and to know, yeah, this is the right approach because I've got the experience to back it up, the data to back it up, the academic research to back it up,
and
the
you've
Nobel
done it
Prize
before.
winners, we've done it before, and the Nobel Prize winners to back it up. It is not speculation. I'm not in the business of speculation. And what I love about it is how well the team, we all work together, Ajay, Nayan, myself, you, Caroline, everybody in the office, how everybody just, it's sort of like, I was going to say a tango, but I should pick a garba, which is an Indian dance. There's a rhythm and a flow to it. And I think that's really important in a business, that everybody it's just working like a smooth, well-oiled machine. It's, like it's like a Porsche, to give
Amazing.
a Western example. And I love that.
My final question for you today, Alpesh, which is always a closing tradition when hosting this podcast. What does happiness mean to you?
If my son is happy, then my wife is happy. If my wife is happy,
then you're happy.
I'm happy. And it's become very simple after I became a father. Very, very simple, very easy.
I love that answer.
Very easy.
That is great. Thank you so much, Alpesh, for being here. It's been a pleasure speaking with you and hearing more about your story and obviously your incredible background. Thank you.
You're very kind. Thank you so much. Thank you.